Good morning, guys. I just made my watch list video, and first just want to say thanks again for people that have been subbing this week. This month I'm up 27 subs. Was at 30 yesterday, 32 today, so kind of slowing down a little bit. So if you're watching the videos, if you watch my watch list, please like and subscribe, because it helps encourage me to continue to make more videos. And if you don't like the videos, you can comment, let me know why, what I can do to improve them. So today I want to talk about trading discipline, extremely important. You see that the market hasn't opened yet, and lately I've been trading pre-market anyway, but today I did the same thing, but I felt like I was kind of like forcing trades. The morning was pretty slow, and I took my first trade. Let me just pull it up. Yeah, I took it off the watch list because it wasn't that good, but I took my first trade on GSUM for the break of this level, and I got in over here, and it popped up, but it pulled right back down really fast, and I didn't really get any of that pop, and sold it for a very, very small loss. And it was okay because everything kind of met my criteria, and I entered exactly where I should based on my plan. And the only bad thing I could say is that I had a chance to get out on that pop, and I kind of hesitated even for like a second or two, and then it popped right back down. And part of my plan is to get out on the first pop. So as soon as I sense any hesitation after the first pop, I scale out with half of my shares. I'll show you really quick here. So these are how I have my hotkeys set up. On this one, I think I took like 6 shares and was selling out 3 each time. And but basically that's what it is. My initial position is double what my scaling out is. So I could have scaled out on that first pop and took a little profit, and then maybe something here, or just got out broke even on the other half of the position and had a small little green trade, but instead I had a small little red trade. So that was my bad. Then there was not a lot going on for a very long time, and then SLDB popped up on the scanner, and I actually saw it right here, and there's no reason to buy here because there's no way you could know that this was going to happen. So you have to wait. And that's part of my plan, is you let it run up to a high of day or high of pre-market, and then on the pullback you just sit back and you watch it, and hopefully it doesn't pull back too far, otherwise it's kind of too weak to even pay attention to anymore. And then when it comes back up near the high of day, you look for an entry. But what I did is I bought in anticipating the break of the high of day, which some people do. It's not part of my plan, so it wasn't really like a hard and fast rule in my plan, but it's still part of my plan. So if I don't trade my plan, I'm breaking a rule. And then what I did is wrote it into my plan. So this is where it talks about how I buy into a trade, and so I had to write in the rule after breaking. It tells me in the plan, wait for an upward trend, mark out the high of day, sit back for the pullback. You can and then let's see, as the price breaks out the marked out high, coming out of that 50% or less pullback, buy in at 1 cent so above. So I didn't do that. I bought before it was 1 cent above. I bought, I think, for the break of this candle, thinking, oh, it's going to continue higher. It didn't. It just chopped around, and then it sold off, right? Luckily, I realized what I did was wrong, and as soon as I felt the chop around here, I just sold out my position before it dropped too far. But I was already on a small red day after taking 2 failed trades, and then I kind of forced this one because it didn't really meet my plan criteria. And then took a third red trade, and really, like, a good rule of thumb is 3 strikes, you're out. You shouldn't trade any more that day, because either the market really stinks or you're screwing up your plan. So, because if both of those things, if you've got good market action and you're trading your plan, you really should never have 3 failed trades in a row. So it's always a good idea if that happens to just step back. So that's what I did, and then look what happens if I actually traded my plan, which was just to watch the pullback. Of course, this is one hell of a pullback here. Look what happened. This thing goes back up to the high a day with little pullbacks along the way, which is ideal. And then if I traded my plan, I would have bought in on this candle. I just moved my high of day, but I would have bought in on this candle for the break of $4, which is like, textbook breakout point, the whole dollar. I would have got in at 401. I probably would have taken some profits there just because, what happened earlier with that quick little popping back down. But it looks like I would have, still had half my position, and then I would have taken a nice big pop there. So anyway, this would have been like a great trade. And if this thing was like real fast, maybe this happened at the very end of the 1 minute candle. I may have caught in a couple of these candles, but anyway, and then also there's another entry, right here that is part of my plan that says, I would have had to take this entry, for the break of 426, and then I would have caught more of the pop up. So anyway, I missed out on really 2 good trades because I took 2. First, I took like a, kind of a mediocre setup, and then that last trade was just totally forced, and I didn't do what my plan said, and because of that, I missed out on a good trade. But anyway, you should really. I used to, I can still trade. I still have money in my account. Let me look for something better. In the long run, you're going to end up losing because you're going to allow yourself to continue to make those crappy trades. So there has to be some repercussion for when you break rules. And something I'm going to stick by from now on is whenever I break a rule, I'm going to sit out the rest of the day and the next day. So that way it really sticks, that when I come back, I say, look, I want to trade every day of the week that I can trade. So if I want to do that, I need to stick to my rules. I'm still green on the week, and tomorrow's Friday, so I'm going to end the week green. But definitely would have been a much greener week if I would have followed my rules. So anyway, yeah, I mean, and I bet you, if I traded tomorrow, there's a good chance, a 50-50 chance, if I didn't kind of discipline myself today, that I would turn my green week red or just make it a much smaller green week. So anyway, lots of babbling there again, but really important stuff. Trading discipline, trading psychology. If you want to really be a day trader, you're not looking just to get rich quick, because that doesn't really work. You get rich quick and then you give it all back, or sometimes even more. But if you want to try to do this on a daily basis and make some side income from it, which is what I'm trying to do in the long run, you've got to develop a plan. You've got to develop rules, and then you have to practice that plan and practice those rules. That's where I'm at right now. And when you fail and you break those rules, or you don't trade your plan, you've got to have something in place, like a safety mechanism to teach yourself that this is how important your plan and your rules are. You're not going to be allowed to trade the next day. So it kind of sounds like immature, childish type stuff. But man, I mean, when you start trading, sometimes you feel like you're acting very immature in the moment, because you get emotion takes over and you get excited and you want to take a trade. Or really, like today, it wasn't so much about that. It was just more out of boredom, I guess, and desperation to be in a winning trade, or in a trade. That's a recipe for disaster. So when you recognize that you're doing that, you've got to do something about it. And it's not enough. I used to think, I'll just acknowledge it. I'll acknowledge what I did, and I won't do it again tomorrow. And usually what ends up happening is you kind of catch this negative momentum, and it's really hard to break out of that. So I think it's better off to take a day off and try to reset. Then when you come back the next day or the next week, you start over again. You go back over your plan. You write in some new rules to prevent you from being able to do what you did before. And if you broke them again, you got to take another day off. So anyway, I think that's plenty said about rule breaking and discipline. I hope you guys got something out of it. And, come up with a plan, trade your plan, come up with rules, and stick to your rules. And in the long run, you'll be a successful day trader. All right, good luck.